Zimbabwe cash crisis worse.
Talking about Venezuela once again.
Systemic important banks. They removed the 1,000 thing on there called monetary awareness. Hey there, hope all is well. Back at you today with some more RT News updates. And as always, whenever I'm combing through the news to find out what's happening around this planet, and I come across the words pension and crisis in the same sentence, I immediately realize it's something worth reporting directly to you. And so as always, whenever you hear a CEO of a major company come out and say there's things to be concerned about, it's definitely worth noting. And here I have Mr. David Hunt, CEO of PGIM. He manages over $1.2 trillion in assets. And when he says that there's things that they're concerned about, definitely is something worth keeping an eye on. But before I dive into those articles for today, I want to have you join me tonight for RTD Live Talk at 9:30 Eastern Standard Time, where we would touch on subjects such as this, as well as whatever else is on your mind. So feel free to join me tonight at 9:30 p.m. Eastern Standard Time for RTD Live Talk. And then more importantly, if you're new to RTD, I want to encourage you to click the subscribe button for more RTD News updates, as well as live talks and interviews. And if you're new to Rethinking the Dollar altogether, I want to encourage you to take the time to visit the RTD University page, where I put together all my prior interviews dealing with matters such as these, as well as the importance of having sound money and being well educated in regards to your personal finances as well as monetary history right now today. So other than that, without further ado, let's dive into some of these articles. So today I have 7 articles I want to cover and basically just skim through the surface, give you something to think about, but more importantly, it's worth your while to take the time to scroll down below and click on the links to read for yourself to get a more in-depth look at what is actually happening in the articles. But one thing that's notable amongst all these articles is the fact that there's more people that's entering the retirement phase, such as the baby boomers, and they are the ones that are on the short end of the stick as far as the market volatility and how everything, our economy seems to be walking on eggshells right now, with so much, uncertainty in the bond market as well as in the stock market. And then one of the articles I'm going to cover actually hints at the idea of how much was lost in that little hiccup we had 2 weeks ago when there was some fluctuations with the stock market there. And so just to show how sensitive everything is right now, these stories are very important and well worth reporting and sharing with their family and friends, especially those in the retirement age that are expecting to actually receive something. So to the very first one. And I actually want to start off with talking about the gentleman over my shoulder here. And so it says David A. Hunt, he's the president and CEO of PGIM, and give an idea of how big of a company this is. It says he's president of PGIM, the global investment management business of Prudential Financial Incorporated. PGIM is among the top 10 largest asset managers in the world with more than $1 trillion in assets under management as of December 31st, 2017. It says PGIM has 31 offices in 16 countries and provides a wide range of asset class, including public and private fixed income, fundamental and quantitative equities, and real estate. So, but to dive into the very first one briefly, as always, take the time to read it for yourself, but skim through it, it says here, troubles with funding ratios, reforms, and then in mass retirement of the baby boomer generation waiting in the wings. It appears that the next financial crisis could be the collapse of the public pension system, according to PGIM CEO David Hunt. He's quoted saying, "If you were going to look for what's the possible real crack in the financial architecture for the next crisis, rather than looking in the rearview mirror, pension funds would be on our list," Hunt told Bloomberg. It says, according to a report by Center for Retirement Research out of Boston College, public pensions only had 71.8% of assets required to meet obligations to their retired members as of fiscal 2016. It says Hunt, whose firm manages $1.2 trillion worth of assets, Prudential Financial, noted that while it's tougher for public pensions to stay funded due to lawmakers setting the obligations for fund managers to meet, he suggested they take a page out of the corporate pension playbook and, quote, find ways to minimize the deficit and to take risk gradually off the table to meet their promises. So in other words, he's saying that there's so much uncertainty, especially with all this tax cut situation. The idea of the deficits and expanding in the next couple of months and years is going to become a major problem for him to deal with, as well as other hedge funds and asset managers. So definitely something worth keeping note on. Next one here goes a little bit deeper. It says next crisis in finance may be public pensions, 1.2 trillion asset manager says. So it gives some of the same information there, but a little bit more detail with the numbers. Next one here, it says, whose retirement crisis, household savings or public financing? So if you scroll through here, what it basically mentions is the fact that the whole economy has shifted drastically, being that a lot of the developed nations aren't really saving enough money. those that are supposed to save and contribute to their own retirement and just way of life in general aren't really saving money. Nevertheless, on the financial side, they're not even saving as far as their conventional assets, as far as retirement accounts or whatnot. So I'll give you an idea what's going on here. It says working households fund their retirement through a variety of government and private programs. In the U.S., working households have some mix of Social Security, Medicare, pension funds, 401k plans, IRA, and home equity. It says the viability of the retirement income mechanisms depend on the assumptions made about returns on assets and liabilities like health and longevity. It says the U.S. savings gap is $7.7 trillion in 2013, is a train wreck ready to happen. So it gives here a couple of things that are a concern, but it boils down to the idea that a lot of people are dependent upon Social Security, Medicaid, Medicare, all the government issued forms of retirement benefits, and then not really taking much concern or interest in the things of the private sector or taking responsibility for yourself with the 401ks and the other alternatives for savings for retirement. And so there's a gap between that, and that gap is what they're saying is going to be a problem, because that gap is going to continue to increase, because those that are more well off, they're the ones that have more of a cushion under them, whereas in those that don't save enough now, they're going to have a much harder time in the future. So more information, more details if you're interested in reading that for yourself. Hey there, just want to take a quick minute to interrupt this video to remind you to visit the rethinkingthedollar.com website, where you get a chance to see all of my postings as well as educational resources, and as well as visit the RTD store, where I have some free material for you as well as some t-shirts. And if you're interested in being more of a blessing to Rethinking the Dollar, I want to encourage you to visit the RTD donation page, where I have a couple links there for you to contribute to this alternative media of work. Other than that, let's get back to the show. Next one here is from the Wall Street Journal. Says the risk pension funds can't escape. So just to scroll down and give you a little bit from this graph here, it talks about the hiccup, the roller coaster ride in regards to what happened with California, their whole pension fiasco there, how the new model has been to double down on betting on the stock market increasing to increase your chances of returns. And here, this chart here shows how volatile and how much of a fragile economy it is in actuality when it comes to investing. It says the roller coaster. It says CalPERS, the nation's largest pension fund, lost 5% of its market value over 10 trading days before rebounding somewhat. And so at the beginning or end of January all the way through the beginning of February, when we had a little dip in the stock market. So just that dip right there shows that how fragile it is. Come the next market downturn, if it happens to be any worse than what it was, and that was just a hiccup. If it turns out to be something catastrophic like a collapse or a real market correction, a lot of people will stand to lose everything. Then the next one here is from New York Times. It says 1.5 million retirees await congressional fix for a pension time bomb. So I'll give you an idea what's going on here. It talks about part of the whole new spending bill. There was a small portion of that that's allocated or dedicated towards better formulating a team or something like that that can help about 200 so-called multi-employer pension plans meet their obligations. So they're studying now how they can meet some of those obligations and help out some of those multi-employer pension plans that are on the hook for paying people. Next one here is just an article I thought was worth reporting on, and in fact that's from Business Insider, and it talks about another hedge fund that's talking about possible crash similar to that of 1987. And so it says Chenavari, a $5.4 billion hedge fund, told investor it thinks we could experience a similar pattern as of 1987 crash. So it gives a little reason as to why that could be. If you're interested, find out more for yourself. And then this one here is closer to home for me. It's right here in Michigan, in the northern part of Michigan, and it says chaos in Traverse City as county government wrestles with pension debt. And it talks about how the last couple of years there's been 3 or 4 people hired to kind of solve or to deal with the issue of the pension crisis happening in up north area, and one by one they all seem to quit. And so that kind of signals that things are not getting better in that small area in regards to the whole pension situation. So that's kind of what's happening in the news. But yet more importantly, when you hear of people that's of higher up, top 10 global asset managers talking about concern, crisis, retirements and things like that, all mentioned in the same story, let you know that they're concerned about a lot of things that, you won't hear about in the mainstream news. And it all has to do with the idea that, we have a good chunk of this population entering into retirement, and they're expecting to receive something, and they're going to be the ones on the hook as far as not receiving what they were promised. And it's going to be unfortunate. And so this leads into the whole introduction of the UBI, alternatives that might be spun off of some type of crisis that will help soothe or calm the retirees that's expecting something. So definitely information worth noting. And if you know anybody that's entering retirement or currently receiving a check right now, those are in danger because they could be slashed, because if they're not meeting the current obligations, it's good to say they're not going to be able to make the future obligations as well. So definitely want to share this with you guys, let you know. Give me your thoughts below. Other than that, let's connect tonight at 9:30 Eastern Standard Time for RTD Live Talk. Looking forward to covering subjects such as this, as well as whatever else is happening in the news that you want to talk about. So see you tonight, 9:30 Eastern Standard Time. Enjoy your day.